Hi guys and welcome back to Yashi. I haven't been posting for a while. I was extremely busy with other stuff this past week, so I apologize on that. But today we're not gonna do a crypto update. Today we're gonna talk about real estate because stuff is getting really interesting. So what happened the past week? First of all, we had a CPI report, namely the inflation report, that came out better than expected by the market for the second time in a row, which is really good news. It pumped the it pumped the stock market a little bit, but not too much because everybody was waiting for the second important thing, which was the Federal Reserve meeting the day after. Mr. Powell increased interest rates by another 50 basis points, so 0.5%, bringing us above 4% basis interest, which is probably the highest we have seen in the past decade plus. However, at the same time, because we're starting to get a little less volatility, a little more data that is matching what the market is expecting, we also have been seeing interest rates that haven't been increasing as much. When I say interest, I'm talking now about mortgages that haven't been increasing as much as we saw, for example, in the past 5 to 6 months. So we're starting to get some stabilization. The market is not as volatile. People, although they're still very fearful, they are starting to understand the new status quo a little bit more, and although very cautious, they are not as worried as they used to be. We still have recession talks, but not as bad. So how did all this affect the real estate market, and what are the data we have about the real estate market that can make us think that it will stay where it is, it will decrease, or it will go up? Generally speaking, as I've been talking the past 5 months, I always have been believing that the real estate market, mostly because of supply issue, will always either stabilize now or go up for the next couple of months, unlike what most people say. But again, this is not financial advice. This is simply me giving my opinion based on what I see on the data sets that I will show you in a minute. So let's get started here. So if you go on mortgage rates again, we can see that interest rates, which reached 7+% in November, but started dropping since the first CPI release that we saw in November, and then also further onto the last CPI release, we got a 6.5%. They increased a little bit after the Federal Reserve increase in basis rate, which is expectable. However, the increase was not as high as we saw with other rate increases we saw in the past. Now let's go on to real estate data. And I'm gonna go a little bit through all the data sets. I used to focus more on supply, but I'm gonna look at a little bit of everything just to see if what I expected would happen actually happened and how it affected many other data points. We gotta start with new listings. New listings, guys, is the amount of homes that are being put for sale every single month. How many new homes are being put for sale? And when I say new homes, I'm not talking only about construction, I'm talking also about used homes. So somebody who's selling their house for upgrading into something else, or to simply sell their house and that's it. So how many new homes are being put for sale? This is 2019. These two are 2022 and 2021. We are seeing less homes being listed on the market than in the past 3 years. While before, at the beginning of the year, it was picking up at a higher pace than the rest of the 3 years, now it's dropping more. Why? A lot of the, let's say, supply of homes came from home sellers that were selling their house to upgrade into something new. The problem is, most of these homes that were sold a few years ago were sold on a 3% interest rate. So if you're a homeowner, yes, you want to upgrade, but are you upgrading to something that is now more expensive than 3 years ago and with double the interest rate of what you got? No, you're gonna wait out and see what happens before upgrading. And this is exactly what we're seeing here. Most of the supply we saw in the past couple of months actually came from new construction homes, which right now, at the current pace, what is happening, builders are trying to sell off the houses that they tried to build in the past 2 years, but they're not pulling out as many permits as they did before to build new homes, because again, as the home sellers that already own a home, they're waiting out on the market and what will happen. Now let's go on pending sales. Whenever you see market alarmists talking about a home crisis, home prices crashing and everything, they mostly focus on sales and pending sales. Pending sales have been going down since, let's say, interest rates started to rise more and more. Not really in the beginning, but towards May, where they peaked, they started going down. Less people are going under contract because everything is getting more expensive, mortgages are getting more expensive, so it's not looking good. However, the pace is starting to pick up a little bit here. Will it surpass 2019 again or not? We don't know. However, we're still pretty close to 2019 levels. And 2019 was already a very hot market. Even if it was pre-pandemic, pre-super shortage, it was still a very hot market compared to, for example, 2014. Now, we're gonna go on homes sold. Again, as we saw less homes being pending, we also expecting less homes being sold. And this is exactly what we see here. Now, we can see that there is a seasonal, let's say, positive adjustments around October, November. The question is, will these adjustments keep on going up, or will we simply keep on following the negative trends of less and less homes being sold? Which, by the way, on one side means that less buyers are buying, but on the other, having less homes for sale, it also means that, even if all the buyers would buy all the homes, having less homes for sale would also affect this trend negatively. Let's go on new listing median price. This is the price that, let's say, sellers put when they list their house. And on the median, not average, so a little bit more accurate than average in my opinion, it is still above the 2021 levels. What does this mean? If you're looking at articles out there, they're all talking about home prices crashing, home prices going down, prices dropped 5 to 10%. Yes, but they also increased at the beginning of the year by 10-15%. Let's look here. The median listing price in April and May of 2022 was 15% above the 2021 levels. Now we went from that peak all the way to a price that is now 3.9% over what was being asked in 2021. So although yes, the asking price went down, it is still above 2021 levels. So on paper, this is not really a housing recession, a housing crash. This is still a housing inflation. And at these levels, it's, let's say, a more healthy inflation. We're seeing, on average, home price increases should be around 3 to 4% max. And we're now at those levels. So it cooled off, but it is not a crisis. Median sale price, same thing. It is above 1 to 2% depending on month you're looking at. So we're still not under 2021 levels. We're still above 2021 levels. On top of this, most of this, let's say, drops in prices are mostly on the higher end of homes. The problem is that most of the builders have been building homes over $300,000 in cost. All the homes that are under those prices, unless they're in very bad condition, they didn't really move too much in prices. And I experienced this firsthand on the house I flipped, on the houses I bought. Most of these entry-level homes I bought and sold either were sold above listing price, or they went off the market very quickly because most of the buyers trying to buy a house are first-time home buyers, not people that already own one. They don't need one, they already have one. And this is why people buying their second house, which is more expensive, those homes actually receive most of the price drops. The expensive areas receive the price drops, but more of the healthier markets and the lower end markets didn't move too much. Let's go to the next data point here. New listing median price, active listing. This is the amount of homes that are for sale right now. So the first data set I showed you is the amount of houses, new houses that have been put on the market. And as we remember, they were under the levels of the past 3 years. Now we have that, we have also less buyers buying, so less homes for sale, less buyers buying, is the amount of the lower amount of buyers affecting the real estate market more than the lower amount of houses putting for sale. This is what we're gonna see here. If there are less buyers than the homes for sale, then we're gonna see, let's say, active listing count going up. If we have more, let's say, buyers than the shrinking amount of homes put for sale in a month, we will see active listings go down because you have buyers snatching up more homes than what the market can, let's say, put on the market every single month. And if you look at the data, and this was very complicated, I'm sorry for that, if you want to skip it, skip it. But if you look at the data, we will see that from the beginning of the year all the way to, let's say, June, July, we saw home supply going up. Sellers were trying to sell their homes before interest rates would go up too much, and buyers were snatching up the last good deals. So we had a pretty good pickup in supply of data. Sorry, you can see it here. But then it started slowing down. Sellers were in a position where it didn't make sense to upgrade because they would upgrade into something that was basically unaffordable, double the interest rates and still very high prices. They stopped listing. And we saw stuff plateauing around August, staying pretty stable across September, and then starting to drop again up until now. Now, we still have more active listings today than we did in 2021 at the same time. However, the trend is negative again. And if the new listings being put on the market keep on dropping more than what we're seeing now, and remember, I just said that builders are building less on top of sellers selling less, what we just saw here in terms of active listings could drop again below 2021 levels, which means we will go again through a period of historically low supply of homes compared to the amount of buyers that want to buy. We also saw that the Federal Reserve is starting to stabilize more, the slowing down interest rate hikes. The stock market is stabilizing a little bit more. So I believe that people will start to see soon that the current situation will become the new status quo. Once the Federal Reserve will be happy with the interest rates they reached, I believe they will stay there for a while. They will not drop immediately unless we go through a recession, which I don't think we will, but then again, that's my opinion against everybody else. Look at your data, do your research and everything. If people start getting used to a new status quo, they will flood in the market. And it will happen probably in 3, 4, 5 months, I don't know. When it will happen, we will see a home inventory that is even lower than what we have today. So more buyers coming in, a home inventory lower than today, probably maybe lower than 2021 levels. So this could create another gigantic increase in home prices because of a simply demand and supply, let's say, formula, without even considering interest rates, which, by the way, haven't been moving too much, as we just saw. Guys, this is the data I have. In my opinion, the supply side is still very messed up, which is very good for home sellers, but very bad for home buyers. If you're a home buyer, do your research. I just bought 2 more homes and I was in a rush to do so because the data to me as a home buyer was very scary. But I'm not saying to do the same, I'm just saying to do your research, not financial advice. Guys, this is all for now. I'll see you on the next update. Probably will be a crypto update. Thank you for watching. Please like and subscribe if you like what I'm doing and let me know what you think. Ciao.